Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Forever seems like a long holding period, but the idea with long-term investing is that you find companies that are going to have compounding revenue and net income growth over the long term is going to pay you back as shareholders in the form of dividends, buybacks, increasing stock prices. There are 5 stocks that I think are great buy and hold forever stocks right now. That's what I'm going to go through today. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and I'll put a few links in the show notes to some deep dives I did on some of these stocks specifically. I'm going to start with one stock that most people know, that is Alphabet, the parent company of Google. There is just so much to like about this company. Search is one of the best businesses ever invented. Alphabet is a leader in artificial intelligence, making its own chips, one of the only major competitors to Nvidia in that space. It owns Waymo, which is an autonomous driving company, could be a potentially big impact in autonomous driving in the future. It owns YouTube, where you're watching this video right now. Here is a look at the company's snapshot, and you can see the stock is not cheap. It was relatively cheap just a few months ago at the end of 2022, but now on a trailing 12-month basis, the price to earnings multiple is 29. And next 12-month basis, price to earnings multiple is 22. But remember, we're thinking about this as companies that you can buy and hold forever. And you can see that estimates for growth are just still tremendous over the next few years. Analysts estimating $305 billion in revenue this year, $339 billion next year, and then $376 billion the year after. That is double-digit growth for a company that's already one of the biggest companies in the world. I think we could see Alphabet go into a phase where they start to return more cash to shareholders through buybacks or dividends. This is something that Apple started doing about a decade ago, and it's been really successful for them. So it could be something to look for from Alphabet, but just such a strong business that I think you can buy and hold this and hold it for a very long time. The second company is not as well known, but is also a phenomenal company, that is Axon Enterprise. They make body cameras and the cloud services that a lot of law enforcement agencies are using. Again, an expensive stock, much more expensive, at least from a price to earnings multiple standpoint. Enterprise value to sales is 11, but just a phenomenal growth company and very sticky business. They sign up to 10-year contracts with law enforcement agencies to buy tasers, body cameras, cloud services. It's a increasing margin business, and you can see that growth is expected to be in excess of 20% this year and nearly 20% the next 2 years. The company has actually beaten estimates by a pretty wide margin over the years, so I could see a lot more potential growth than analysts are currently estimating. But again, this is just one of those companies that 10, 20, 30 years from now, I think Axon is going to play a much, much bigger role, not just in law enforcement, but in personal protection and potentially even home safety. I think those are 2 natural growth markets for them. The third stock on my list is Nike. Nike just continues to be a long-term winner and compounder. Like these other companies, you never get these stocks for cheap. So price to earnings multiple is nearly 30, and growth isn't expected to be outstanding at high single-digit rate. But Nike just continues to churn out cash and profitability year after year. There are very few fashion companies that I would expect to definitely be around and be really strong 10 or 20 or 30 years from now. But Nike is absolutely one of those. You can see if we go back to the 10-year chart, the company is trading for nearly 5 times what it was 10 years ago. And Nike was already a very big, very successful company at that point. So I wouldn't be too scared away by paying a high price for this. Would definitely love to get in cheaper, but like I said, high quality companies don't come cheaply right now. With these final 2, I'm going to get a little bit more controversial. Verizon is the 4th stock on my list, 7.9% dividend yield. The market just doesn't seem to like anything that Verizon is doing right now. I think there's a lot more to like about Verizon than investors might think. Very strong cash flow business. It's the kind of product that people aren't just going to cancel because you need that cell phone connection. They're adding more fixed wireless broadband, which is basically replacing cable with a box that's just sitting in your home. So a lot of growth opportunity there. Like I said, you have that 7% dividend yield, trailing 12-month basis, price to earnings multiple is under 7. There's a lot of debt on the balance sheet, but I think the stability of this business is just something I want to be long term. And if you hold this company for 10, 20 years, just that dividend alone is going to be a phenomenal return for investors. And what we've actually seen over the last few quarters is that free cash flow is improving. You would think with the stock price dropping like this, that free cash flow, net income would be getting worse, but actually the opposite is happening. Cash flow is improving because the investment phase of the 5G cycle is going down. Some of these new products are starting to contribute to the bottom line. Like I said, the fixed wireless business. So I think this is just a buy and hold stock. Just collect that dividend, a phenomenal dividend yield right now. That's why I think this is a buy and hold forever stock. And the final one is maybe the most controversial, and that is General Motors. GM trading for a price to earnings multiple under 5. That looks extremely cheap, but that's not actually what I'm excited about with General Motors. What I'm excited about is Cruise, the company's autonomous driving business. Cruise is already working to expand its fleet in 15 cities in the US. We could see that grow exponentially to thousands of cities over the next decade. I think that could ultimately be a $1 trillion company, just Cruise itself. And GM owns about 80% of that business. So the core automaking business is profitable. It's churning out cash. But what are they doing with that cash? They're investing it in both buying back stock, reducing the shares outstanding, and investing in Cruise. I think Cruise is ultimately where the value is going to be for General Motors. The current business is just enough cash flow to get to that future that Cruise is building. That's why I like this stock as a buy and hold. But what do you think about those 5 investments? Leave your comments in the comments section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.